inflation moving sustainably down to our objective. Comments on the economy.
Welcome to the stream.
And I look forward to
Yeah, this is gonna be crazy.
Our economy is strong overall and has made significant progress over the past
really
2 years toward achieving our dual mandate goals of maximum employment and stable prices.
Alright, we're gonna go back to this other stream because this guy was ahead.
Having cooled from their previously overheated state,
Oh, really?
inflation has eased, and my FOMC need to reach new all-time highs. Real wages are increasing at a solid pace, broadly in line with gains in productivity.
This is the candle we're looking at, guys.
The ratio
It's
of
this one.
job openings to unemployed workers has moved down steadily, but remains just above 1.
This is the longest
so that there are still more open positions than there are people seeking work. Prior to 2019, that was rarely the case. Still, labor markets have clearly cooled.
See, okay, they're saying good things to the elections coming up. This makes sense.
Jobs as somewhat less available than they were in 2019. The moderation in job growth and the increase in labor supply have led the unemployment rate to increase to 4.2%, still low by historical standards. We do not believe that we need to see further cooling in labor market conditions to achieve 2% inflation.
That's good. Welcome, Tono. Welcome.
Most recent 12
This is the
months,
candle we're
headline
looking at,
core inflation
right
were
here.
2.2%
And he's talking right now.
respectively.
Welcome to the
Inflation
stream,
has been
everybody.
broad-based, and recent data indicate further progress toward a sustained return to 2%. Core goods prices have fallen 0.5% over the past year, close to the pre-pandemic pace.
Here we go.
Wow.
Supply bottlenecks have eased. Outside of housing services, core services inflation is also
Here we go. Welcome, Joey. What's up?
Housing services
This is the candle we're looking at.
continues to decline,
Right here.
but sluggishly. The growth rate in rents charged to new tenants remains low. As long as that remains the case, housing services inflation will continue to decline. Broader economic conditions also set the table for further disinflation. The labor market is now roughly in balance.
What?
Turning to monetary policy.
Welcome,
Over the
Ben.
past
What's
year,
up?
We continued to see solid growth and healthy gains in the labor force.
We're watching
and in
this candle
productivity.
right here. You're gonna see
Our
some
goal
crazy
all
stuff
along
happen.
has been to restore price stability without the kind of painful rise in unemployment that has frequently accompanied efforts to bring down high inflation. That would be a highly desirable
There
result
we go. There's
for
some
the
volume.
communities, families, and
14,000 on the
businesses
last
we serve.
candle.
While that task is not complete, we have made a good deal of progress toward
The one
that.
before that was 3,000.
For much of the past 3 years, inflation ran well above our goal, and the labor market was extremely tight. Appropriately, our focus was on bringing down inflation. By keeping monetary policy restrictive, we helped restore the balance between overall supply and demand in the economy. That patient approach has paid dividends.
Welcome.
Inflation is now much closer to our 2% objective. Today, we see the risks to achieving our employment and inflation goals as roughly in balance. Our policy rate had been at a 2-decade high since the July 2023 meeting. At the time of that meeting, core inflation was 4.2%, well above our target, and unemployment was 3.5%, near a 50.
Here we go.
In the 14 months since the July 2023 meeting, inflation has moved down and unemployment has moved up, in both cases significantly.
Okay.
It was time for a recalibration of our
The last
policy
candle's
stance
tweaking out more.
to reflect
Yeah.
progress toward our goals, as
It's
well
not
as the
done.
changed balance of risks.
If he makes an announcement or
As I
something,
mentioned,
it's
our decision to reduce our policy rate by 50 basis points reflects our growing confidence that with an appropriate recalibration,
we got a lot of volume.
Curse. Welcome.
strength
Candles are going crazy right now.
in a context of moderate economic growth and inflation moving down sustainably to 2%. Looking forward, if the economy evolves broadly as expected, policy will move over time toward a more neutral stance. But we are not on any preset course. The risks are two-sided, and we will continue to make our decisions meeting by meeting.
That's good.
As we consider additional policy adjustments, we will carefully assess incoming data, the evolving outlook, and the balance of risks. Overall, the economy is in solid shape. We intend to use our tools to keep it there. We remain resolute in our commitment to our maximum employment and price stability mandates, and everything we do is in service to our public mission. With that, thank you very much, and I look forward to our conversation.
That wasn't anything crazy at all.
Yeah.
So let's see what the convo has. The market hasn't really moved. It's up slightly.
It was
since you
tweaking
said
out
this.
before. I was like, yeah.
Thank you. Just a guy, welcome, Tona. Welcome. So, now we basically just need to see. It wasn't really, he was just basically giving updates on where we were at, which is just expected, right? He's going to say good things. The election's coming up, of course, right? Basic stuff. So, I mean, at the moment, it's just really to see what happens now. As you can see, it's just like nobody's really touching it. There's not a lot of volume. And now we just need to wait. Right now, if we're able to get down to 5773, we're able to see puts. We're able to see a huge sell-off. Welcome, Gage. Are we going to get down there today? Probably not. But is that for me to decide? No. If it does get down there, I will enter. That's just kind of how it works. Iker King, hello. And yeah, so I kind of want to see, based off, if they said anything else.
L'Automatica Sport.
Alright, you're not going to do this today. Come on, Jerome. See if they said anything else. If it was just him. Oh, wrong one. Yeah, it was literally just him. That's all it was. Oh, here, let's see. I think that was it. Oh, they're going off again.
Literally millions of people, including here in Tennessee.
Let's see what they got to say
We have a
now.
couple of things that we do in these situations. One is that
Is it Powell or other people?
Yeah, he's yapping again.
Customers in affected areas. And the second thing is that sometimes in these situations when power is out, there's a need for cash. And so we find that is a very important thing in these disaster situations. And so we have the ability through the reserve banks to make sure that the banks have available cash so that if power is out for a significant amount of time, there's enough cash to do transactions. But
he's just going to be yapping. I mean, it's always the same thing. I mean, this year I think we're up like 15% overall, which is a lot more than usual. Usually on election years we're up like 12% compared to like 8. This year we're up like 15. So they're just pumping. But I want to see like how cutting ranks, which they did last time.
Since the September meeting?
Since the September meeting. So most of the data that we'll see before our next meeting hasn't come yet, of course. And we can talk about that. But
why are they talking like it's not still September?
One thing we're going to do
I know.
It's September 30th.
Crazy.
They're talking about the
I know,
other
every
one.
time they talk.
Yeah, they're talking about the other one where he yapped away. Ra, hello. Iker King, thank you. Make sure to like the stream, guys, if you're enjoying. Let's see. We can still see some crazy candles. It's not over at all. This would be the time.
There's lore and there's research that says that actually GDI, gross domestic income, gives a better real-time reading. And for the last year and a half or so, GDI has been quite low relative to GDP, raising, for those of us who forecast the economy, the risk that GDP will turn out to have been overstated and it'll get revised down to meet GDI. So that's been a downside risk that we've been monitoring. As this audience will well know, quite the opposite happened, and there were very large, adjustments to provisions to GDI, and there's now no gap between the two. In theory, there should be no gap. It's no statistical error measurement. So that kind of, I would say, removes a downside risk to the economy. Secondly, it has looked as though consumers were spending more than their income. We see disposable personal income now being estimated up, and so that's no longer the case. Again, removing
POL. Will, hello.
Downside risk that the level of consumer spending might be unsustainable. So we look at that, and again, it looks. These were very large, healthy upward revisions to income.
So we had.
There's that cell. There's that cell.
Spending was revised upward, but income was revised upward so much more so than spending that the savings rate came up.
That's right.
Even with greater spending.
Yeah, the savings rate too. So we think savings are now there are more savings on people's balance sheet, and the
Oh,
savings
yeah.
rate is higher. So that speaks of more
Oh yeah.
kind of background that suggests.
Yep.
that,
There's
Oh,
that
yeah.
sell. There's that sell.
level. I'll just mention quickly two.
Now
other
we just
things.
bounced though.
One was just
5773. Let's
modest
go.
increase in estimated productivity. We can talk more about that, but of course we're watching this situation with productivity. Productivity is very important to potential output, and the question is, are we seeing rising productivity which will be sustained over a period of time? And of course, I think it's way too early to say that. Nonetheless, you do see some increase in productivity because we've increased income, but not hours worked. The last thing,
These are the type of days that you do not trade a lot, as you can see.
there's a bit of a tension between the labor market.
I mean, 1, 2, 3, 4, 5, 6. 6 screen kills, the big push, and then now you just have a huge sell off.
And which is
So
which has been
unpredictable.
quite solid. And I would say
That's why we do levels to
that
levels.
tension has not been resolved.
Levels to levels.
Nonetheless, I would say though that if you
Supports to supports. Resistances to resistances.
spending data, that may also help with the
All the goodies.
So if the economy, so GDI, it was pretty significant upward revisions. GDP also was revised upward somewhat. And so when there's strength in the economy like that, does that give you some sort of sense or more of a sense of security when you're seeing a cooling labor market that maybe the worst outcomes won't happen if GDP is still that strong?
So the answer is ultimately yes, but I would add though that I think there's a lot of thinking that the labor market may give a better real-time picture in some cases than does GDP data. So if you look back over prior downturns, you'll often see that they weren't well predicted by GDP data, but they were by one or more aspects of the labor market. Now we don't see that happening. There's really nothing that I can point to in the economy that suggests that a downturn is more likely than it is at any time. So we don't see that, but I would say seeing that
I don't believe that.
support for thinking that the GDP readings we get are solid, I think that does happen. It helps at the margin. That's not going to stop us from looking very carefully at the labor market data, though.
So I have a few questions here on unemployment. The first is related to the summary of economic projections, and then the second is related to state versus national rates of unemployment. So in the summary of economic projections, the median participant has the unemployment rate moving from 4.2%
Wow.
today to 4.4% by the end of the year. So continued shift up.
4.2 to 4.4.
And yet the
not good.
median expects that the pace of rate cuts will move down as the unemployment rate continues to move up. How do you square that picture? How do you explain that?
Well, remember that the summary of economic projections is really just a tabulation of the individual 19 participants. So it doesn't come from one sort of consistent thing. But I can tell you why I think people will have written up a couple more tenths of unemployment. It would just be that, as we've seen, the level of job creation is maybe not quite at the level it needs to be to hold unemployment constant, given assumptions about supply. That would make sense to me. I think everyone at this point is looking at their forecasts and understanding that there are great uncertainty bands around it. But the SEP asks you to write down your most likely case, whether you want to or not. And so that's what it is.
So sort of a love-hate relationship with the summary of economic projections?
That's not unfair.
Not for you personally, but yeah. Is there
I would say sometimes
Oh my.
people can pay too much attention to it. I will say that one thing is we do it, as this audience well knows, we do it once a quarter. And over the course of a full quarter, the old SEP can get...
I cannot believe TikTok did that.
But for a few weeks after
Bandy.
the meeting, after we write down the SEP, it's actually a pretty good read on what the
I should have actually
is.
read it.
I'll point to one thing I will point to is that if you look at the path that people wrote
Why?
down, we
Did
had 10
actually
people
explain-
at
they can
4
explain it?
cuts or more, or 2 remaining cuts. We had 19 people at 3 or more. But the sense of the committee, this is not a committee that feels like it's in a hurry to cut rates quickly. It's a committee that wants to be guided. Ultimately, we will be guided by the incoming data. And if the economy slows more than we expect,
It is being
then we can
sold.
cut faster. If it
We
slows
are
less
having
than we
sell
expect,
right now.
we can cut slower, and that's really what's going
To
to
the
decide.
max.
But I think from a base case
Love it,
standpoint,
though.
we're looking at it as a process that will play out over some time, not something that we need to go fast on. It's more, it'll depend on the data. Excuse me. There you go.
Yeah, so before I get to that second question on the unemployment rate, I'm going to ask you a point-blank question here. How are you thinking about the November meeting?
So a couple things. One, we have 2 employment reports and an inflation report coming in. So
Wow.
the main thing will be
Remember
to look when we get to that
5782.
meeting at the totality of the data. and
That
the
was
data,
that's what switches us to
data,
sell
the
too.
unemployment data, and the inflation
I'm pretty
data,
sure.
And asking ourselves,
Let me double check my line.
is our policy stance in the
Oh,
place where it
okay.
needs to be for us to
Well, it's 57733 to actually start sell, but 5782 takes away the bulls.
We don't have that data yet, so that's the main thing.
Okay.
But the other thing is just
Yeah, we need a whole 5773 to 577. It's like 5772 to 5775.
it's a committee
It's that whole zone.
we will do what it takes in terms of the speed with which we move. But if you look at where we were 2 weeks ago, coming up on 3 weeks
Wow.
ago, I guess, when we wrote down.
Hello,
this
Will. Hello.
decision,
Welcome, welcome.
It's it was a situation.
Welcome to my people on YouTube and Twitch. If you guys have any questions, let me know. We're just watching Powell yap right now.
The votes were on 50, and that would mean 2 more cuts. It wouldn't mean more 50s. Now, of course, that'll depend. It'll depend on the data.
There you go.
But
Oh my
ultimately, that's what the
gosh.
baseline is. If the economy performs as
And
expected,
we're gone.
that would mean 2 more cuts this year, a total of 50 more.
Yeah, 2 more cuts.
Question from the audience now. The regional bank presidents know their districts very well, and they come into the FOMC meeting, and well, even before that, the Beige Book, right, provides
Wow.
what's going on around the country.
My
And
gosh.
so we focus on the national unemployment
This
rate.
What has he done
There
yet?
are
wild.
state unemployment rates as
I don't know.
well. Are there certain states that are
The
primarily
amount
responsible for
of
driving up the
sell
unemployment rate nationally? Is it something
we
that's
just got out of
unified
nowhere is
based?
ridiculous. The amount of
How would you
volume we just got
weigh
out of
sort of
nowhere is
national versus
ridiculous.
State level.
I mean, at the
That
end of
is
the day, we're looking at
wild.
national aggregate levels, but the real value, one of the great values of the Reserve Bank system is we get detailed reports of what's happening.
And that's
in the
gonna
district. We really
close.
start with the directors.
Good
of the
close right
branches
there.
And the main banks who come in and
Holy
and all they talk to the staff and also to the president of the Reserve Bank.
What did we say?
And I think the banks just do a great job of
Coach would have been
gathering data and
astronomical right now.
see what's going on in the district. This is enormously
Beautiful.
useful to us who are sitting.
If we're able to get under that, it's gonna be
don't
very,
have
very
that range
nice.
of context or that so I think it's quite useful. But
It is
at the end of the day,
fucking
we have to
moving.
go on.
He's just yapping though.
Although of course they're great. They're different things. It's a big country, a big economy. They're
Welcome to my people on TikTok.
doing better than others.
In your prepared remarks, you mentioned about job finding prospects. We have Dana Peterson here, chief economist from the Conference Board. The Conference Board had data recently showing that folks feel like it's getting harder to find a job. Does that, one, concern you, and two, how do you weigh sort of survey data versus hard data like a job openings and labor turnover survey, for instance?
We look at everything, of course, but in particular, the job finding rate has come down very significantly. And so if you're out of work now, it's going to be harder to find a job than it was 2 years ago when the labor market was extremely tight, where you would have had multiple.
If we fail 5773,
give you offers,
you know what's gonna happen. If we bounce, you know what's gonna happen, right?
Perhaps a little bit soft. So the job finding rate is much
Same
lower.
page.
By so many measures, the labor market is still solid, but it really has cooled. I mentioned vacancies.
Yeah, so if you're in the stream and you're wondering what I mean, if we're not able to hold under 5773,
that is right around 1.
and I confirm that we're gonna go in calls and watch it return back up. It's just gonna be a bounce off the support. If we're able to close, then you go to puts. But we need to wait and just make sure there's confirmation before we do anything. We are very oversold.
Labor market that's still strong.
Yeah.
where conditions have cooled considerably. And as I mentioned, we don't think that labor market conditions
But
need
the
to
entire
improve
market
further
just shit.
from where they are. Just to take the unemployment rate.
JD, do you have headphones? Are you outside? Is that why? Yeah.
No, I'm in the house.
Oh. Is that headphones?
Oh, what's going on? No.
Okay. Do you have? Can you put on headphones? Please.
Yeah.
Thank you.
I
Sorry.
took 'em out 'cause I was charging.
No, you're all good. I literally have an alert on this line. I just got alerted because I've had an alert on it for her. God knows how long. JD knows how long.
Because we haven't really talked about inflation yet.
Weeks. We've been waiting
Really?
for an. Oh.
3-month annualized pace is running right.
I've been waiting for it to close. I had an alert on it. Krausen, welcome. This is our major support right here. If we're able to close below it, we're gonna enter. Brandon, hello, hello. Let's see if we're gonna be able to close or hold this support. And Jerome's still yapping.
So, we think of core inflation as three buckets: goods inflation, non-housing services, which is by far the biggest bucket, and then housing services, and that's rents and also owner's equivalent rent. The first two have looked like they've, broadly speaking, moved back to their pre-pandemic level. Housing
Let's see if we're able to
inflation
hold
has
here.
not yet.
5773.
That what should
Important support.
happen when market rents go up,
This is our test.
turnover, when the increase in market
This is a very, very important test right here, guys.
as leases turn over year upon year, you should see housing services inflation flatten out. And you are seeing that, but you're seeing it just at a sluggish pace, as sluggish as it usually. So I think we went from thinking, at the beginning that this would happen fairly quickly, to now thinking that process will play out over a period of some years, 2, 3, 4 years.
30
Nonetheless,
seconds.
as market rents,
I'd like to do it on this
actual
candle if we
leases
can.
as long as inflation in those
It's testing it.
rents, those
5773 is being tested. 25 seconds. Is it going to bounce or is it going to hold? The amount of sell we have is just blowing my mind. This, we've tested the support at least 8 times and bounced. Is it weak? It is. Is it going to be able to go through it? I don't know. It did. Let's see if we hold. Did we hold? Did we hold? We held. I am in here. And I am in here.
Probably sluggish growth from China.
Order filled.
But how much do you
Awesome.
rely on goods prices being in deflation in order to help that overall?
5763
before the pandemic
is what we tapped. Did we tap it?
mild deflation in goods.
We have not tapped 5763 yet.
And other reasons. And, so you take those three buckets I talked about, together they produced inflation between 1.7 and 2%.
Did I not get
So
filled?
we're trying to get back to
Oh my.
inflation is 2%.
I got filled.
The combination of those three buckets is less important than the fact that you get the aggregate back. So I just pointed out that goods inflation is kind of back to where it was, and so is non-housing services, and that's most of the inflation bucket. But the third one is not there. Any combination of those
All
things
right,
will
cool.
do, but I think it really looks like the third, over time, is going back down to where we would like it to be, which is at a level which won't be 2%. It'll be a little higher than 2%, but that will make the aggregate
Come on.
2%, right in the range of 2%.
So,
Okay.
you're going to be embarking on a review
Cool,
of the
cool, cool.
framework.
Alright, I figured everything out here.
And inflation, the behavior of inflation since the framework change. In
5763 is the next support we would be testing. Are we going to be able to go one level or more? Let's find out. I'll be taking out 2 contracts at my first level
We're
touch.
starting our second 5-year review late this year. So we haven't started yet. We're just now in the process of kind of laying out all the questions we're going to ask. And
75% of my position.
I think we're not really ready to roll that out yet. But of course, we're going to be asking
5763.
how should we change our
We need
framework,
to tap
which is divided
5763.
in the,
Like to hold under
statement of
5763,
underlying
obviously.
monetary
It's going to
policy.
continue
How
us
should we
downward.
adapt
But our
that
first level is
to what
5763.
we now understand to be the way the economy works works? What have we learned from the last 5 years?
And this is what happens when Powell talks,
That's what
right?
we're doing. So
Here we
we're
go,
asking all
5763.
of those questions and
Perfect.
our answer.
5 years is
Nice,
so long.
nice, nice.
Can't believe we're already
Now what I do is I leave a runner, right?
through the framework.
I'm gonna leave a runner.
It feels like yesterday.
And our next level is going
So let me
to
ask you, you
be
talked a few times about the data that you're going to receive.
5751 is our next level.
One of those data points.
5751 is our next level.
Employment report that comes out during Black
Let me
Hawk.
turn this off. Let me just mute it for a second so I can figure this out. 5751. 5751. This is our next level. And also we'd obviously want to hold under 5763 in 2 minutes. That's obviously what we'd want. That would help us out. So 5773 has been a level that we've held so many times. JD knows. Been waiting for it to drop for a while. And it finally did.
Way
So
too long.
yeah. So this is what happened. This is the move that we just had. And we want to close under 5763 right now. That is what we want.
Data, and maybe it's the volatility around the data. Data is being considered during the blackout period. Maybe it always was. It just wasn't that volatile. Even policymakers have talked about, and yourself.
5751 is our next target. 5751 is our next target. And we want to hold under 5763 here in a minute.
Just ahead of the November meeting.
Come on. Minute 15. Let's go. Let's ride. Let's ride, boys.
5751. This is what happens when Powell talks, ladies and gents. We got a huge, what now looks like a small green candle. What now looks like a small green candle, and then this. So, let's see what happens in these 49 seconds that we have. The amount of volume that we are getting in these candles, you can see it right under that wick, is just insane compared to the rest of this day. We've got no volume all day. Just I've been waiting and waiting and waiting.
32,000 in the last one.
There we go, 5751. Let's see if we can get there. 5751. Probably test it on the next candle. Hopefully we can do it on this one. That would be nice. Probably not though.
Policymakers do have the ability to change their thinking or their forecast.
Order filled.
Awesome. I had to take out one of my funded, if you guys heard that and wondering what that was. 4 seconds, 3 seconds, and we have the hold under 5763. So right now, right, I'm in this and I have a runner. I'm going to be smart about this. I'm going to use right above, like probably 5765 as my stop. So if we're able, if it's just skying right back up, and it's just able to do that, I'm going to stop out and take my profits and be happy. Let's see if we get there. We do need a pullback as well because our RSI is right now at 23. It is insane. Oh my lord. Let me see something. See if we can hold. See if we can hold here.
Hiking the federal funds rate in 2022. The focus
Got a lot of time left there.
the policy lags.
So, just to give you guys context, everybody watching on YouTube, Twitch, TikTok, this support 5773 has been bounced off so many times. We've played the dips, we've played the bounces, and we've had one hold under, which barely was a false breakout. It literally just like barely went anywhere. It wasn't anything. This is what happens when it actually does. And on that breakout that we lost, that trade that we didn't make money, we ended up losing. How much did we lose, JD? What, $20? $16?
Yeah,
'Cause we had
24.
We had tight stop losses,
Nothing really.
and that's the whole point. And here, I'm not going to tell you exactly how much we've made because I don't feel like sharing that information. But it's about a 3-to-1 winning ratio. So, you know, it's nice. It's nice when you're able to structure the trades like this. And 5765, knock on something, but we still haven't tapped it. He's just chatting shit, dude. I want to run till tomorrow. 5765. You know it. I know. We know it. Everybody knows. The chat knows it.
Transcripts are released every 5 years.
Stay under.
So
Keep us alive.
But the thing is, it does need a pullback. Seriously. I mean,
Yeah, it
we
does.
are.
It's gonna be a scary pullback.
We are somewhere where
5 years ago, you
we
made
have
the
just.
call that
It's,
you were cutting rates.
I mean, it's gone deeper on. MACD's looking not that bad. The MACD doesn't look terrible, but my RSI is looking terrible. And that's why it's kind of having this fight. I mean, yeah, we got space. We've got room, depending on how big this move wants to be. My sub will be... I want to see, is there another support in this range? There really isn't.
It's a very different situation than the current one. I guess I'd start by
Okay.
saying. So if you remember, we had raised rates very slowly. I think a total of 9 times.
All right, so apparently I can't do the Powell thing on TikTok, so I stopped. I'm just trying to show the trading. TikTok, please don't ban me. Please don't ban me. I'm just trying to teach people how to trade. That's literally it. But where are we right now? 5-7. Come on. We got a minute and 12 seconds. Oh, bye.
why do not sell?
Alright, I'm out.
Fuck.
Nice.
Dude, mine won't sell.
Market.
Mine won't sell.
Market.
Yeah. Oh my god, I'm losing everything.
Hold on.
Fucking.
Do you have another order open? Go to orders. What is it saying? Is it saying rejected?
It won't let me sell it, dude.
In what sense, JD? You need to give me a little more info.
It's saying it would over like draw or something. I don't know.
Go to your orders.
Orders. I'm on orders.
Is there any open?
Market.
Is there any open?
Yeah, there's one.
Yeah,
Confirm and send.
Cancel the order that's open. It's
How do I cancel?
click on it and I'll say cancel.
Cancel. Create closing order. Dude.